Welcome to Markets Now. I'm Michelle Rourke with Randy Martinson of Martinson Ag. Well, we are quietly mixed in the grains this morning. Cattle to the plus side, hogs are lower. Randy, let's talk about the quiet session here in the grains, especially after we had such a big rally before the holiday on Wednesday. Is this just in part because it is the day after a holiday and a lot of the traders aren't around?
I think so. I mean, whenever you have a holiday in the middle of the week, you always seem to get a little bit of poorer trading to wrap things up for the week, and especially to come back on a Friday when there's really not much new change. I mean, the only thing we're looking at today that's different is option expirations has taken place. I think most got themselves on the where they wanted to be before the holiday break on Thursday. So I just think, yeah, we're looking at some thin light trading just because of it being a holiday.
So you mentioned option expiration, and we also have first notice day coming up. The press that we have seen in these nearby contracts, especially July corn, how much of it has been tied to that?
I think a lot of it has been. I mean, you look at it, I mean, they're talking about, the exports switching over to Brazil because of their big crop, but we're not seeing that. We're seeing good exports take place as far as U.S. corn is concerned. Even again today, we had a decent export sale number. So USDA is likely will have to increase exports again in another month in their next report. So the demand is there. I'm not looking, ethanol demand is there. That continues to be ahead of pace needed. So we are seeing strong demand for corn. So right now, the only way we can look at the July being under such pressure is because of option expiration and because there's a lot of July future fixed, basis fixed contracts that need to be taken care of here by the end of the month. And I think that's putting the pressure on.
Yeah, there's been speculation as well that because of what we have seen in terms of the unwinding of, say, those July B spreads on corn, that we're going to see a lot more inventory in the quarterly stocks on June 30th. Do you think that's true?
I mean, I wouldn't be surprised. When you look at it from the elevator standpoint, yeah, I think they're going to see a big increase in supply. Right now, up until the last report, I think the stocks were showing 2/3 or 3/4 of the supply in the farmers' hands. I think that's going to switch over and go into the commercial side of things. But for the most part, the demand is there. We should be seeing July perform a little bit better. It's very likely we're going to continue to see like I said, demand for corn increase as we move forward, and that's only going to tighten up the supply, which that kind of is showing up in the new crop and why that's seeing some strength.
No doubt. You mentioned the exports, weekly exports this morning, good on corn, but they were pretty decent for soybeans and wheat as well, weren't they?
Oh, they were. I mean, yeah. I mean, that's the nice thing is, I don't know if it's because of our cheaper dollar or if we're seeing some booking because of, military or war concerns, but we are seeing good demand in wheat and soybeans, and especially, corn has been strong. It hasn't tailed off, but we're also seeing it for wheat and soybeans.
Okay. There are some war concerns. Do you think at least the wheat market has been putting in a little premium as a result of that or not?
Well, yeah. I mean, I think the wheat market is pushing their, trying to price in the weather concerns that they're seeing in the southern plains. I mean, they've been getting, some pretty heavy rains. It's causing some disease, some quality issues down as they're trying to get the crop off and harvested. Right now, estimates have it close to 1/3 of the winter wheat could come into lower quality and possibly go towards feed rations. Up here in the northern plains, even though we weren't expected to see any rains the last couple of days, we're starting to see a little bit more volatility in the weather as well, as a hailstorm moved across western North Dakota last night and did some damage to some of the crops. So I think right now some weather premium is trying to be built back into that wheat.
Okay, so you think it's weather premium versus geopolitical premium?
I would say there's some geopolitical as well. I mean, you're looking at war taking place in two of the major regions of, wheat. One, wheat production. Of course, the Black Sea, the largest wheat producer. You look at the Middle East, the largest wheat consumer, and you have military actions taking place in both. I think there is some. Egypt, especially, is probably looking to book some of their needs while they can logistically get some of their product in. And we're looking at Ukraine and Russia having some issues with production and with their war escalating, that it's going to be tough to ship grain out of there.
Yeah. No, I think we're trading both war and weather premium. That's why I asked that. And sometimes it's hard to split the two apart to know what the impact is. weather otherwise looks like we are going to see a bit of a warm up starting here. Talk about how the trade might react to that.
Well, warm temperatures are, the warmer conditions are very much needed across the whole entire region. I mean, the Northern Plains need it, the Corn Belt needs it. So right now we're expecting to see, for the next week, some warm conditions that will help get the crop growing and help improve its status. Right now, I mean, we're hoping that we can get corn knee high by the 4th, and that's going to be a tough thing to swing up here in the Northern Plains right now. So I think, if this heat or this heat dome only lasts a week, it's going to be a little bit negative to the market. But if it goes past that, then it could start to see a little bit of support to the market.
Yeah. So let's talk technicals, because soybeans got right up into some chart resistance. We got above some chart resistance in wheat, and now I think we're trading back below it.
A little bit below it. We pulled back a little bit, so that we're struggling a little bit, and I think that's again some of the thin trading. I think next week we'll see a little bit more of a true true attitude towards how the market should be trading. And we're going to also start looking at pricing in, like you said, the curly grain stocks and the acreage report next week. But for the most part, the technicals and soybeans are right up against some major resistance. Hopefully we can break through that. Corn is also new crop is seeing some pretty good move, but the old crop has a ways to go yet.
Yeah, for sure. Do you think that the biofuels news that we've had here is enough to keep the soybean market going higher, or at least the bean oil market going higher? Because that one's also taken just a little bit of a break from the rally.
It has. I mean, it's starting to push a little bit again now, but I think it has been priced in. Now we need to see a little more confirmation of those numbers that came out and a little more increase in demand and production before I think the market has started to react a little more on it.
Gotcha. Okay, cattle market to the plus side here today. We did have some lower cash trade this week already in the north. So is the market going to be able to continue to recover here after we put in some reversals again here?
It's getting tougher and tougher for that market to recover. I mean, it wants to go down, but because of the stronger cash, because of the strong demand, we got the cattle on feed report coming out Friday afternoon. I think all that is kind of bringing some stability into the marketplace. But, at this point, if cash starts to come under a little bit of pressure, we start to see a little pushback from the consumer. We got our second big summer holiday coming up with the 4th of July. I think after that, we can start to see this market drift a little bit just because of technical pressure.
All right. What about the hog market? It's setting back, but man, we've been cracking out new contract highs. So maybe we're due for a little bit of a correction here, you think? Or
I think we're due for a little correction just to kind of clean it up a little bit. Demand continues to be strong. I think that can help carry this market, because if the consumer is switching away from beef, they're going towards pork. And I think that'll help stabilize that market.
all right. Thanks so much, Randy Martinson with Martinson Ag. That is Markets Now.